Sean and Darren both asked me if I could explain where they can find vector candles. I think you probably heard me talking about vector candles. You may have seen them on my charts. And so I'm just going to really show you where they are. I'm going to give you a 30-second spiel on what a vector candle is. I'm not here to talk about how necessarily to trade them. I'm going to show you a video, the first video I ever saw on vector candles. Feel free to watch that. It gives you a little bit more information. Again, doesn't really tell you how to trade them, but you know, it's worth having a look. Now, the indicators I use are all, well, not all of them are free, but the ones to show you vector candles, they are free. So, you know, you can find them on TradingView, and we'll go through where to do that. But in terms of vector candles, let's just take it back really simple first and just talk about candlesticks and how candlesticks are formed. You might be thinking, bloody hell, Harry, we're not that thick. But really basically, and as you can see right and smack in the middle, candlestick 101. So if you see, you know, the conventional view on candlesticks, right? A green candle, price is moving up, buyers are in control, it's a bullish place to be. And then red candles is the exact opposite. Sellers are in control, price is going down, so it's a bearish place to be. Well, if you're using vector candles, you're probably believing in the market maker mentality, because this is really what vector candles are for. And actually, the market maker vector mentality will tell you, you need to throw that mindset out. That's absolute utter bollocks. We're just going to delete that because we don't need it. You need to look at it in completely the opposite way. And what the market maker way of thinking is actually, you seeing vector candles going up, market maker is selling into these. They're creating sells, and then red candles is they are they are buying into those. So how does that work, and why does it mean anything? I talked about this back in January when we talked about the Wyckoff or Wyckoff strategy, so I'm not going to go through it in that much detail now. But obviously, we're in a two-way market. Anytime you ever want to buy anything, there needs to be a seller on the other side of it. Now, when we're talking about market makers, we're not talking about spot trading. We're talking about perpetual trading. So every time you want to take out a long, someone has to take out that short against you. Now, if there isn't a retail sucker to do it, then someone needs to provide that liquidity. And that's where the market maker comes in. Now, they're not trading with leverage. You know, they're not, if you put 100x in, they're not going 100x the other way. They're just providing the opposite side of that. So how does it work for them? Well, they see price moving up, these green candles, and they start building shorts, okay? Because they want to short the top and then reverse it, okay, and bring it back down. So what are they doing? Every time they place a short, someone needs to buy. That's you taking out that long. They can drive that price up. Now, they're not worried about getting liquidated because they're just setting it in for liquidity. Okay, so they can take it all the way up if they need to, but obviously, you know, they want to make money. They can't leave anything exposed for too long because that ties up their liquidity. They may not get liquidated, but it ties up their liquidity. And so they're just interested in the volatility. So they're moving price up and down. And what the vector candle is doing is the vector candle is showing us increased volume over a given price, over a given time period. And then that is represented in a particular color. And from that, we can understand what the market maker is particularly doing. And if we understand what the market maker is doing, then we can play along with them and not get caught out. And we can benefit because we understand that they do things in a set way. So if we know where they are in that particular pattern stage, then we can manipulate it that way. That's the whole premise behind it. I've been talking about this for 6 months and I've barely scratched the surface. I do not feel comfortable enough or confident enough to really go through the procedure. But in terms of the candles, or how you bring them on the chart, what you do is you go to indicators, so on TradingView, and then the one that I use is imbalance PVSRA, and that stands for, PVSRA stands for price, volume, support, and resistance analysis, and that's it. That's all it is. So you select that one. I've obviously already got it selected up here. Just unmute it. Suddenly your charts are going to look like that, which all the colors that you had for your candles have completely gone. Now, there is something else you can do with that, which I'll talk about a little bit later on, but there is another thing that I use down at the bottom, and that is called the PVSRA _VS. So again, just PVSRA. If it is volume, you click on that bad boy. And then once you do it, it's down here, and I'll underscore it there. So this is what you will have probably seen on my charts. You might have seen a little bit more as well, but this is the raw basic form. So now we can see that we've got these volume candles. And what I normally do is, because when I'm doing market maker, I use perpetual charts, because they're not trading spot. So it doesn't necessarily matter for the example, but if you are going to use it and you want to understand it, it's better using perp charts. Now, I typically would actually use Binance, because I think that's where the majority of the volume is, but whichever one you feel comfortable with. It's probably going to give you a more accurate price. But what we can see is we can see these vector candles. But the real question is, well, you know, what are they? How are they set up? And what is it actually showing? So we'll have a look into settings in a second, but I've written it down here. So you get 4 different colors. You've got green, red, blue, and purple. I don't know what that is. I'm not very good at colors. Purple. That's what I've called it. And what they're showing is a green candle is showing greater than 200% of volume. It turns into a green candle. Red candle is obviously 200% of a bearish volume. Blue candle is 150. Purple candle is 150 as well. So blue is tied to green, and purple is tied to red. Now, why is that important? Because you can see at what stage potentially the market maker is at, how many rises they're doing, and where the volume is coming from. But it also gives you a really good visualization of where they are. Because what you got to remember, as I said, so we see 2 huge red candles here. We might think, well, the market's dropping. We need to start to do some shorts ourselves. But you got to remember, the market maker, he's driving the price down, but he is buying into this. So he is longing here. So at some stage, he needs to realize these. And that's why what you normally see is the Bart-Simpson patterns, or you see these W formations, double tops, or whatever. You then superimpose the vector candles on there. You'll actually see that a lot of, most vector candles are recovered. So we had a red vector candle here. This was initially recovered by this green vector candle, but it wasn't fully recovered. We went sideways for a bit, inducing people to think we might drop further. So retailer putting more and more shorts in, and then ultimately price rips back up, cleans out those 2 vector candles. When on the way up, it forms its own vector candles, which is absolutely fine. And then price continues, and we see these rises and falls. Red candles down here, recovered by green candles. Red candle down there, recovered by green, fallen back down. It's pretty much taken out, but this vector candle cleared that remaining little bit there. What you can see next to any active vector candles, though, is a shaded box. Now, this shaded box is represented unrecovered or imbalances within vector candles. So these are vector candles that haven't actually been reclaimed yet. And what you can notice, if you look very carefully, is it's only the body of the candle. So every time a wick eats into it, it shortens the box, or it squeezes the box ever so often. So the box is just that size. And then there's a little line that's in the middle of it, and that shows you the 50% of what is left of the box. And again, if you follow the market maker strategy, then 50% are quite important. So actually, what we can see, this on the daily chart, you drop it down to any other time frame, these vector candles are going to change. It's all based on the volume, which we'll go down and talk about in a minute. But what we can actually see is we have got some green vector candles that still need to be recovered. Okay, so remember, price has shot up. What has the market maker done? They've been setting their shorts in here. Okay, so everyone's been getting super, super excited. They've been longing it with the market. Market maker's got some shorts. So they are imbalanced at the moment. They are still on their books, and they're going to, at some stage, need to recover them, or at least attempt to move the price to recover them. So it doesn't mean that the price is going to immediately fall down there. Remember, they are not playing with liquidity, with leverage. So they can hold these for as long as they need to hold them for. But these are generally targets that we may look to eye up. And then you've seen me use high block, and you've seen me use other charts, and they kind of tie in with liquidation levels. And I think 23,200 is an area that I'm looking at, which is pretty much the 50% recovery of this one vector candle. So we'd be certainly looking there. Price may then move up before coming back down, and having to have a look at some of these other ones. But you kind of get a feel now for at least what is on the chart. It may look like some of my candles have disappeared. I think it's just the overlay of how this works, because There's white candles as well. White and grey are basically just normal volume behavior. Just sometimes when I hold it over these boxes, the white ones disappear, so you only see the grey, but you can see that the predominant vector ones remain there. The only other thing to really talk about is this down here, which is just a volume bars representation of the vector candles. So all that information that turned that into a vector candle is written in here. And actually, this is probably something that you're not necessarily aware of, but even if you had just ordinary volume up, every time you hold, if you look at this number on the right hand side, it's constantly changing over each of the different bars. And that's because it's showing a visualization, representation of all of the different changes, ticks, orders, confirmed orders or whatever, approved orders, sales, longs, that have gone on during that particular time period. So we can kind of see, where volume's low, it's the figure's low. When we see a huge number, we can see actually in that day, we had on this particular bit stamp chart, 12,000, just over 12,000 was registered, so a significant amount of volume. That is a large drop, and also it was above 200% of the average of the preceding stuff, so it turned red. So that's useful to have. It just gives you another visual representation of how volume is doing and driving those prices up. And the reason you want to know that is because actually these purple and blue do play an important role, because depending on where they start in the chart, they will either tell you something is about to happen, it's about to speed up, or it's going to slow down. And this is a great example down here. So we've had price moving down aggressively over a couple of days, volume above 200%. And then we had price, if you remember, that was the Friday after the banking crisis, and we had that reversal. And then the next day we had a blue. Now remember, blue is associated with what retail would think is a bullish market. We know is market makers are actually putting in their shorts, but we're actually starting to see the volume suddenly shift from them picking up or selling their longs, and now they're starting to place their shorts. So we're seeing that reversal come through, and then we're seeing it follow through there. So it started off at 150, and then the pace increased to above 200%. We see that over the next 3 days. Now, I'm trying to find an example of where you would see that slowing down. So I suppose this is an example of it. So we go back here, we had the red drop it down, bit of recovery, we had another vector candle, but it wasn't as fast, so it's starting to slow down. Now, whatever happened, we actually saw there was another one there, so it didn't necessarily work out how we thought it was going to work out. Of course, no strategy ever works out 100% of the time, but we can start to take information and understand where the market maker may be. So, we've seen them do their rises up here, so we've done our shorts. We've started to see that the volume started to drop off, and it started to tab it down. We may be in a position to short it ourselves, because we know that's what the market maker is. He's going to be building longs to a lower price so we can get a bottom, so we can ride that short down. Well, that might then give us a way. He's slowing down here. We might be looking to take profit. One of the guys that I watch would say, pay yourself. And so these can be used, both the purple and the blues can be used as good indicators. If you are particularly in a trade and you're using this strategy as an ideal opportunity to pay yourself to take some profits. Now, I don't use this on its own. I don't have time to go through it all, but trust me, I use EMAs as well. So you need to understand that. Now, if you want to understand it more, you can try and watch this back and watch me bumble my way through it, or you can have a look at this video. I'll post this video in there. It's from Traders Reality. What are vector candles in Bitcoin? It's about a year old, but it is completely valid. You just have to pinch yourself, because he's talking about prices in around 45,000. They were the days. So yeah, well worth a watch there, try and understand it. You can follow the links at the end, and you can get a few other free free indicators on here, which will show you other things that we can do.